But the big headline is, of course, coming in from the US, where overnight we not only got the GDP data, but as we've just put across to you, the speech around midnight here in India. You've seen Dow actually rally almost 20% from the low. You've seen the US dollar fall. Yen is at a 3-month high. So it's a dream run as far as the Indian markets go. It's a good construct with the global events also all falling in place. And that's exactly what we're going to now be discussing with our market guest, Yardeni, the President and Chief Investment Strategist at Yardeni Research. Good morning here in India. So you've seen that big rally. Is this the Santa Claus rally? The markets are now finally getting what they wanted. The Fed rate will not peak above 5%, and we're perhaps not going to see another 75 basis point rate hike.
I think all we can really say from the speech is that Powell made it pretty clear that instead of 75 basis points increase in the Fed funds rate at December 13th, 14th meeting, we're probably going to get a 50 basis point increase. He didn't promise that would be the end of it. He suggested there might be more, but clearly the word moderation is what got the stock market very excited, that they're no longer talking about just willy-nilly doing these big hikes every meeting, but they're going to slow it down. And I think the market figures that we'll probably get to a terminal rate of around 5% and that the economy can live with it.
Markets right now, sir, are excited. They feel that the Fed has interest rates have pivoted, and the only way interest rates will go now is going to be lower. What are the chances that what markets are celebrating today could get challenged? Because Fed has not promised that they will cut rates. No, they promised that they will go slow.
Quite the opposite, as you suggest. And not only will they go slower on raising interest rates, but once they've decided that they are where they want to be, and that could be around 5% plus minus 25 basis points, but we're getting pretty close to where they probably want to be. But they've said it over and over again. They're going to stay there for a while. They don't believe that inflation is going to come down as quickly as the markets seem to believe. And I think if you read the speech carefully, and I think we all try to read the speech carefully, I certainly did, it made it very clear that the Fed chair is very much still concerned that inflation is uncertain, it's unpredictable, and it may persistently stay high here for a while, which would require the Fed to keep the Fed funds rate around 5%, in which case it's hard to imagine that the bond yield can fall much more than it has. So I think the markets, there may be a little bit too much euphoria in the markets right now, though I do think we're experiencing what is often called the Santa Claus rally.
And the Santas has come early. Instead of last week of December, the Santas decided to come this time in the first week of December. My follow-up question, sir, is the average interest rates for the US economy and for the world for next 3 years will be higher than last 3 years.
I would think so.
What do you think will be the impact of that on the economic activity and demand?
Yeah, well, I think ever since the pandemic, we can't say anything with certainty. Everything's kind of topsy-turvy, upside down. Look, I am kind of looking at the bond market and wondering, is there a message there that we really should take seriously? And maybe the bond market's looking at the global economy and concluding that demographically things are going to remain pretty slow. Populations have aged just about everywhere, with two important exceptions, by the way. India's population is not aging and it's growing rapidly, and the same thing can be said for Africa. But on a global basis, there really is a slowdown in global populations, and that may be one of the reasons why bond yields may not go up from here and might actually stay down.
Such a pleasure having you on the show today. Thank you for taking the time out.
My pleasure always. Thank you.